Good morning, story trading VIPs. Welcome to another glorious morning of making sense out of markets and trying to predict some price action. It's been a great few weeks for our community and on these morning shows. And today, first, we're going to talk about the indices. We do have special guest Chris Tarbert back. He was on with us a couple days ago to talk about Clearfield. Their earnings came out yesterday. It was a huge beat. So excited to talk to him about that. But first, SPY QQQ on the post-market wrap yesterday. You know, I've been looking for a test of this 20 DMA, right? It looked like we're having, first we thought, okay, rally up to there, the 200 DMA. It started pulling back, and all right, we're heading for the 20 DMA. But in the post-market wrap yesterday, I noted this open red candle. We saw both on the SPY and the Q, and open red candles are often a bullish reversal signal. So that was something to look forward to. And we had follow through this morning. We're gapping up above yesterday's high, and we're doing it amid some solid earnings reports from the two big ones that came out yesterday, Applied Materials yesterday and JD.com this morning, both big important companies. And there's been a lot of good earnings reports. It's been mixed earnings season. So I'm still kind of in that place where I think that the worry about inflation and interest rate is abating, and now we're shifting to an earnings story, and you're going to see this diverging performance between companies that are making money and companies that aren't making money. I think that's the spot we're in right now. So if this reversal confirms, maybe we're on the way back up to those targets, 405 on the SPY and QQQ. Let's call it, before we talk about 308, let's talk about 293 first. Okay, so that's the direction now, and you got to take it day by day and sometimes change your mind. So we had this reversal candle yesterday. We changed our mind. We see a bullish 20 to 50 cross potentially forming on the QQQ. So that's what it is on the major indices right now. Looks shaping out to be a good day. Now you can see Clearfield up 17%. So we'll talk to Chris about that in just a second. It looked like blowout earnings. A couple other stocks I want to mention. XXII, the other trade of the week pick I chose for Wolf Financial Spaces. There's about $1 million on the offer at $1.30 yesterday. It was showing about $600,000 earlier in the week. Now it's about 1 million shares. That'll be interesting. They were at Craig Hallam yesterday, one-on-one meetings with investors along with Dario. Monday, 4:30 p.m. We're going to bring on a very special guest from XXII. He was an investor relations person for XXII for many years, is no longer officially affiliated with the company, but he still owns his own shares, is bullish on the company. He knows everything you ever wanted to know about XXII. So we are meeting with him in a VIP Zoom 4:30 p.m. on Monday. So if you're not a VIP member, make sure to head on over to StoryTrading.com and grab your 7-day free trial. Do that. Some other bits of news. I'll get to PRVB in just a second, but CTMX, we played this really beautifully yesterday. Calculated $165 price target based on the 45 cents cash that CTMX is getting from Regeneron. That was a easy trade with that fundamental calculation. Now it's pulling back a little bit here. I'm interested in this in pullbacks. I think that's a solid kind of floor up here in the 155 to 165 range. Anything below that, definitely buyable. And let's look at the technicals. Maybe this can go for a swing move up to $2, because not only this is just re-rated for the cash. That's it. It hasn't really been re-rated for the potential business and the $2 billion in potential milestone payments from Regeneron and the sentiment boost that comes from the validation that Regeneron is working with them. So this is a stock that may continue to have legs at CTMX. Just point out KMPH, a couple news items. Cantor Fitzgerald, I believe, put a price target of $20 on this yesterday. And then this morning, they got some volatility, but no real movement. I really didn't like the last earnings report, but something we're keeping an eye on. KMPH, TFFP. Remember, they had some really bad news a couple weeks ago. I bailed on that. We brought in Dan Carlson from TFF Research, Tailwinds Research, and he said avoid the stock till an offering. And when they have the offering, maybe it makes sense. Well, they had the offering this morning, down 17%. I think it was priced at $1.15. You can go look at the details there, but there's also some warrants attached to that. So potentially an opportunity there if you like the story. I'm personally staying away from that right now. Tough Built also did an offering. Really no reaction. That's pretty positive. They had really, really good earnings the other day. Now they did an offering. This is interesting. Perhaps now you're reverse. All right. I really like seeing that it's not dropping on the offering this morning. Potentially it's on its floor. Maybe this was the move. The insiders, participating. Maybe they shorted from 390, and they're covering on the offering, and now we go up. I like this. This looks like an interesting setup to look into. TBLT. All right. We had the CEO of VTSI last night. You can go listen to it. The recording is in our app, and you can make your own judgments about where this is going. Some good information on that call. I want to point out TPCS. Apparently, on the conference call last night, they said they did file an application for an uplisting, which is often a catalyst for a stock. So there may be something there. Today, also, if the markets continue doing well, QQQ, SPY, etc., these are some top quality names that I think will be great for day trading. TSM, these all have recent catalysts and good sentiment. TSM, Mobileye, GFS, Celsius, Meta, all of these have really good catalyst sentiment, maybe even fundamentals. So you can look into those for trading today. Now, with that, let me bring on Chris Tarbert. How you doing, Chris? You're a hero.
Good morning, Ben. How you doing today?
Doing great. Clearfeld, you can see gapping up 17%. Break it down for us.
Okay, well, look, I thought I had some pretty aggressive numbers compared to the street, but Clearfield once again seemed to perform even higher than my lofty expectations, which is obviously great for investors. To be honest with you, I mean, look, the stock got beat up a little bit because their earnings were about a week late. It was much to do about nothing. They had, I think, some extra auditing to do with the acquisition of Nestor Cables from Finland. So, in my estimation, the stock probably should have been around, 105, 110, 115 anyway. With these great numbers, it would have popped, just as much. So I think we've got some runway to move here. The short interest is a little elevated. I think it's third highest ever. So I think you've got some fuel as as well as there. With the new forecast or the new revenue numbers delivered by the CFO and the CEO, I think they're already on a run rate for $5 in earnings. Knowing the conservative nature of the management team and what we've seen over the past few years, obviously, I think that's a number that they're going to easily beat. So I think I'm going to call out. Go ahead.
Chris, let me back up. I'm not sure if we got it. They beat top line and bottom line. What were the numbers versus the estimate? Do you have that in front of you?
The numbers, let's see. The numbers that were estimated for the fourth quarter, I believe, around 72 million and 86.
That sounds right.
Yeah, 86 cents a share. I had them at 89 million and $1.10, and I believe the numbers that they had were $1.22.
Yeah, that sounds right. So that sounds right. So they did 95 million. You can see the news feed versus 72 million estimate. So that's a huge beat. I like to look at that in terms of catalysts and headlines and what may attract the traders. That's a huge beat. And also the earnings is like a 50% beat, right? $1.22 versus 86 cents.
Right.
Let me just check that number. It's 355 for the year. And then I want to get a precise number because I want to do some math with you here. Income $1.22. Okay. All right. So go ahead. Just wanted to clarify that. So $1.22 beat 86 cents and 95 million beat 72 million.
Right. And look, and some of the numbers that caught my eye was, Nestor contributed 7 million. And if you extrapolate that out, they're on a $42 million run rate, which is a little bit higher than I was estimating as well. So I think what would, and sort of to do a tease here, you and I have an interview with Sherry on December 7th. And what I'd like to, break down with her is get a little bit more into the weeds on what their plans are for Nestor. They, talked about moving some of the manufacturing from Nestor to Mexico to get some efficiencies, for the drop cables that they're going to start producing for the North American market. But she hinted on the call in her commentary that they're going to expand capacity at the Finland Nestor location. So it sounds like to me that they're really going to make a push into expanding sales operations into Europe. So I'd like to know what their plans are and what their targets are there. It sounds like Nestor's already got a really good reputation in the northern part of Europe, but I think we've seen some some indications on social media, et cetera, that they're looking at some opportunities in Germany and some other places. So that's one thing that I'd like for us to focus on. The second, and they really didn't focus too much on this on the call, is that Clearfield has joined a consortium in Canada called Fiber One. Now, our understanding is that there's about $9 billion of, call it federal grant money coming in for fiber builds in Canada. And so Clearfield looks like that they're readying themselves for that opportunity as well. So, they talk about expanding production in Mexico. They talk about expanding production in Minnesota. So it'll be really interesting to see how they're going to support sort of that opportunity as well. Other than that, some other things that I noted were, all this revenue growth that they're having. We still have not seen sort of any of the BEAD and RDOT program really start to hit the bottom line yet. I still think that the grant money is less than, call it 5% of their overall revenue. And Sherry Barnett commented that they really didn't see the grant money hitting till 2024 in terms of money hitting the bottom line. So that's a lot of organic growth that they're currently getting and continue to going to get in 2023.
I remember that comment, Chris. See, I don't know the company nearly as well as you. So listening to it from a Joe Schmo, whatever, like an outsider, John Doe doesn't know much, average Joe, whatever. That comment really stuck out to me. I was like, what? Like they're growing this fast, but just saying all that like federal grant money that's still to come. I was like, that really got my attention.
Well, and so I was like, okay, so if the money's still not going to be here until 2024, what's 2023 going to look like? And then she comes out and pops out a number of 380 to 393 million, which is 40 to 45% growth in 2023. And you're not even seeing the stimulus money. So where's the money coming from? Well, she says that, a lot of their growth that they're seeing, the organic growth, is really coming from public-private partnerships, private equity investments, et cetera. So a lot of companies are front running, some of these fiber builds with other investment dollars other than the federal, government money. So, what does this translate? Translates into, you're seeing a 5, 7 to 10 year, opportunity here for some massive fiber builds. We saw in the news, there were some rumors swirling around that AT&T and Morgan Stanley were coming together for a $4 to $6 billion sort of investment fiber build as well. So we're starting to, leads credibility. We're starting to see a lot of this private equity money sort of jump into these fiber builds as well, which is obviously great. I mean, it just creates, more and more tailwinds. So anyway, so let's go back to look at the numbers. So, knowing the conservative nature of the company, knowing what we're, so some of the commentary we're seeing, I'm up in my earnings per share for 2023 to at least $6, maybe slightly higher. So, we can look at the math and we can all, always discuss what we think, a fair PE is going to be for next year, with that continued growth. But even at a 30, 35 PE, and if they do $6 in EPS, which I'm calling out, you're looking at $180 to $210 stock price. Hey, Ben, also on audio.
Sorry, I was on mute. Okay. Yeah, that's very, very helpful, Chris. Big price target there, 180 to 200. So let's look at some other targets, both technical and a little bit fundamental from my perspective for possible upside. So let's see. The first thing I want to look at here is technically that $126 to $128 resistance. So that's somewhere, obviously, that is a target. Another one, Needham came out this morning and put a price target of 135 on the stock, slightly above all-time high. And then there's another way I want to look at this, which I often do. What I'll do is take the existing trailing PE of 31.32, okay? And then you take today's earnings of $1.22, you just annualize it, slap on a 31.32 PE, and you get to $152. Now, you may say this is arbitrary, but this is a shorthand that I've used after earnings, and many, many times it works very well in terms of a near-term price target. So those are three possible near-term price targets I'm looking at is 126 at the 52-week high, the Needham target of 135, and then that calculation I did of 152. And you see Chris is thinking we could get 180 to 200, but I don't think you're suggesting 180 to 200 is near term. You're suggesting
No.
it can grow into that. It can grow into that after another earnings call or two, right?
Right. So most analysts do a 12-month price target, and that's what I'm doing. Right. All right. And so,
okay.
and look, and Lake Street is one of the other analysts that follows them is also at 135. And if you look at the sort of the history of what the analysts have been doing, and also to be fair, the company's doing as well, they're cautiously stair-stepping up the stock price, right? So if you look over the last 4 to 6 quarters, every quarter they beat by 30, 35, 40%. The analysts follow suit, they stair-step it up, and then it's this, sort of every quarter, boom, 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 boom. I'm calling out what I think the endpoint is going to be in 12 months. Okay.
Got it. All right.
So if you're looking to hold a stock, which I highly recommend you hold this for 12 to 24 months, I think you're going to be really happy, and I think you could see a double here.
Cool. Nice. Yes, I am holding some of my IRA. I also have some trading shares, and thanks to you and your bullishness, I picked up some extra trading shares this week and into the close yesterday. So those trading shares I got to sell. So let's talk about those folks who are trading some trading shares. We talked about some upside potential targets, downside, right? What can we potentially see here if you're looking for a pullback and entry? Look at these support levels. You got 20 DMA at 104.67. You got the 50 DMA at around 100. Let's just call it 100. You round down to that psychological level. And honestly, I don't think there's any shot whatsoever it goes below 100. I said this on post-market wrap while we were looking at this live. When I saw the price around 100 or below, I'm like, just psychologically, when you get a beat that big and you have $1.22 earnings and you quickly do the math, you annualize it, throw a 20p on it, like any average investor is going to look at that and say that's a steal below 100. So I think there's no shot whatsoever at going below 100. If it does back up the truck, there is a chance you get a pullback to the 20 DMA, 104, maybe a chance you get, slightly above 100. If you get those pullbacks, I'm not a certified financial advisor, but I personally would be jumping on pullbacks at those two support levels. Other than that, it's going to be hard to play today other than taking profits if you're overweight. Because if this thing opens, it's already at 109. If you start opening in the 1-teens, to me, that gets tricky, right? Because if my near-term price target is 126, right, that's already a hefty wave the way there. Are you going to stabilize today? Are you going to pull back and then maybe target 126 Monday or Tuesday? It gets a little bit tricky. So, I think risk reward, if you're in there in that 104, 105, maybe 107 range, right, that's a really, really good pickup for today. Higher than that, yeah, I think it goes to 126, 135, 150. Hopefully Chris is right. 12-month price over 180, 200, but you don't know the path there and the speed which it gets there. So be careful how you play that. What do you think of that analysis, Chris?
I think look, I agree. And, you and I have always discussed one of the other ways to play this is if you want to be ultra conservative, you could look at, selling some puts in the 95, 100 range. And, if it never hits, then you've collected, basically 100% premium. Yep. And if it hits, you got the stock price, you got the stock at a lower price.
Yep, absolutely. And selling puts, there's 2 times I like to do that. One is at technical supports, but the other is that when you have inflection points with a new catalyst, which will re-rate the stock to a new support level, right? So in this case, I'm like, this is not going below 100. So even though the stock is up 17% today, I'd be an advocate for selling puts on a day like today, even though people are like, Ben, why would you sell puts when the stock is up 17%? You should sell puts on a down day. There's another way of looking at it. This stock has a higher floor. It's safer now to sell those puts. So good point on that, Chris.
Yep.
All right, Chris, thank you so much. I appreciate all the hand-holding you've been doing with us on Clearfield over the last few months. You've definitely, I'm sure, helped a lot of people make some money here.
Yep, and look at everybody, and everybody who's really interested in Clearfield. We like to invite everybody to watch the interview on 12/7. We're certainly looking forward into getting into the weeds on some of these issues that we talked about today with Sherry Baranek, CEO of Clearfield.
Yep, awesome. And speaking of, we do lots of CEO interviews. We have that one coming up. We had VTSI last night. We had Drio a few days ago, and you get access to all these recordings in our app. So you can hop on over to StoryTrading.com, get a 7-day free trial to see those. There was one stock I missed. All right, so Chris, I'm going to say goodbye to you. Thank you so much.
All right, thanks, Ben.
All right, take care. All right, with one stock I missed, PRVB. It's very newsworthy because I've known this stock for years. I had held it in the past for a couple of years because they're really making a groundbreaking drugs for type 1 diabetes, and it finally got approved last night. This is a drug which delays the onset of type 1 diabetes, very important for a lot of people. So there's a little bit of sentiment attached to it for me because I wanted them to succeed in the past, and I had not been holding this stock for the last year or two. This was something I was holding years ago for a couple of years, and just didn't hold long enough. But now you see it's very hard to play FDA approvals. And last night I told people I'm taking a quick gamble on it. Privately, I was telling people don't play this because often FDA approvals, what happens is the question is, does the company have now enough money to commercialize? So this is down, and I was doing some research last night, and it seems that they may be in a financial pinch, at least short term. Rather than this approval being an asset, it could be a liability for them because apparently they owe some money now to another company that was involved, some milestones they have to pay. They don't get any huge payments from their partnership they have, like Sanofi, some sort of strategic relationship with Sanofi, but it's not for big dollars. It's only like $35 million investment they're supposed to make based on like a 3-day moving average, and they have until February to do it, something like that. So it looks like they're going to have to raise money, right? Or find a partner. Hopefully they'll do it via partner and they're not going to dilute. But it looks like and I think that's why the stock is down. To sell the news. This happens so often with FDA approvals. I was hoping it wouldn't happen because of the blockbuster nature of this news, and I'm sure it's going to get a lot of articles over the weekend. Type 1 diabetes, it's huge. There's going to be dozens of articles over the weekend on this. But unfortunately, this is the situation with the financials. So I don't know. I don't know what to tell you. You got to do more research to dig into what those financial arrangements are. But that little bet I made, and it was a small bet. Someone in the group said, "Oh, why are you gambling on something?" Which I knew was a gamble. I'm like, you know what? Everything in the market's a calculated gamble. This was a much bigger calculated gamble because it was really just buying the headline and the sentiment without really knowing the fundamentals. And I'm going to lose a little bit of money on it, but I sized it very small because I knew it was a big gamble. So with that takes us to the end of our show. And I just want to summarize what we're looking at. SPY QQQ looking really healthy. Again, if you're kind of day trading, look at this list. TSM, Mobileye, GFS, Celsius, Meta. They could all have really, really good opportunities, good buy the dip opportunities today. And all eyes on Clearfield. Good luck, everyone.